Guys, so today we're going to be talking about liquidity. Once you understand what liquidity is about, your trading game is about to change for good. Please ignore my baby in the background. He's not feeling fine today, so he's at home, but please bear with me. All right, I'm going to make it easy as ABC, so that when you understand liquidity, you tend to trade different. You tend to select your trades in a very, very high fashion way. You don't trade anything anymore. So let's go down to business. All right. So let's start with the first kind of liquidity. Before we continue, there is the nature of how the market acts when liquidity has been tapped into or has been grabbed or has been mitigated. Forget the big grammar. Once market catches liquidity, it moves the opposite direction. And I'm going to be showing you an example here and on the chart. So just stay with me, get your notes and your pen, and let's go. So if you look, there's something called trend line liquidity. Now, trend line liquidity in this trend, you can clearly see is an uptrend. All right, it's a bullish trend. Now, when I buy here, I want to be setting my stop loss below at this level. If I buy here, I want to be setting. So you see, there's a lot of liquidity here because people are setting their stop losses there. So there is money in the market. And that's not to say there are people that are not trading the pullbacks. There's also money here. But I just want to teach you this way so that you will get it. Don't get confused. Just know that where I put my stop loss, there is money here. All right. Some people are trading pullbacks, so there's money here as well. All right. Now, this is a downtrend. Of course, if I sell here, I'm placing my stop loss here. If I sell here, I'm placing my stop loss. There's a lot of money here. That's not to say people are not also the dummies or the people that like to scalp. They are not putting stop losses here, but they are not trading pullbacks. They are. It's counter trend trading. But let's focus on what we are doing here for the right traders. Those that are selling are putting their stop losses here. So there's liquidity here. Now, this is what I like to call the liquidity pool. Why? Because the market is ranging. Nobody knows where the market is going to. So there's stop losses everywhere. People are selling and putting stop losses above. People are buying and putting stop losses below. So there's money here. All right. Money everywhere. All right. Now, I'm going to be showing you another form of liquidity. Now, there's something I want you to understand. I call it external liquidity and internal liquidity. It's my own way of calling it. Some other people have different names they call it. But I want you to understand that I already explained to you the feature or the way the market acts when it taps in. It runs the opposite way. Now, look at this. When you have a downtrend, I want you to remember that when there's a break of structure, liquidity has also been grabbed. Yes, a lot of people don't know how to teach this because it's quite complicated. But if you have been in the trading game for some time, you will see that once there's a break of structure, there's a pullback. Why? Because it has grabbed liquidity here. There's liquidity here. It has grabbed liquidity here and it has moved. Why? Because instead of some people to sell, some people are also buying the pullback. So when it comes and chops those people's stop loss, imagine someone is buying here and they're expecting it to go up and then it comes back to chop their money and continues. Instead of selling in a downtrend, they are buying. So they become liquidity and a market comes this way, creates a new low, bam, and moves back. So you see as it chops this liquidity at the break of structure, it pulls back immediately. That's how it acts. It comes again, gives you another one, it pulls back immediately. Okay? It comes again, gives you another one, it pulls back immediately. That's how you know that what? Liquidity has been swept. And in the form of break of structure, a new low has been tapped into, there has been swept, and then a small zone for a pullback has been tapped into, and look at the pullback. That is what happens. So this place too, there is liquidity. There is liquidity. All right, it's going down. It's going down. Just like I explained, when you're having a downtrend as well, there's liquidity here. Then you still have some silly people that are, what are they doing? They are buying. They are doing a counter trend trade in a downtrend market. So those people are going to be our next lead, because when the market gives us a new low, They are liquidity. They've been chopped. All right. So I hope it's clear. Now, those people that are buying in a downtrend, they become our break of structure. They become our liquidity when the structure breaks. And when it does that, it hits their stop loss. And what happens? The market runs opposite and gives us a pullback. All right. Now, that is the one I call external liquidity because it is the break of structure. External liquidity, break of structure. All right. You can just call it break of structure because some people will say, this one I've just explained here is what I call trend line liquidity. But you see these ones, then some people call it transactional liquidity. A very good friend of mine calls it transactional liquidity. When there's a break of structure, the market pulls back. There's a break of structure, market pulls back. All right. Same thing you can see here in an uptrend. What's happening? The market is giving us new highs and pulling back. New high, fiam, new high, fiam. So forgive my Igbo way, but I'm trying to make it easy. Now, when it does that, people that are what? People that are selling, doing counter trend trading, they are the liquidity here. Why? Because we're coming back to break structure, hit their SL, and come back. All right. So anytime it chops those people's SL, you see a pullback. All right. That's how you know. Now, that is what I call external liquidity. Now, internal liquidity is the one that happens in a major trend. Now, you can see that these things have been, markets will come and give you small downtrend liquidity here. Some people that are here say, it has started moving, let me sell. They will sell. And what is happening? They are becoming liquidity because when the market finally breaks structure and sweeps the liquidity of break of structure, it will come back and sweep their liquidity here. Because what are they doing? They are selling in the wrong zone. They are selling in the wrong zone. They are not waiting for the market to come back to the right resistance to sell. They are selling in between. Those people that like to sell 50% of the move without waiting. All right? Or those of us that like to sell gap entries. If there is a gap here, they've sold. They become the liquidity because what happens? Market goes back to where it is meant to sell. And fiam, immediately it grabs their liquidity and taps into here. What happens? Fiam, it goes the opposite direction. Same thing with a bullish trend right here. What's happening? Market is going nicely. Then people will say, gap day here, make I enter. They are entering, gap day here. 50% day here. They've entered. What happens? The market does this, uses them at liquidity. You'll be saying, market don't they go now, don't give us new high. If you've not taken your money, what happens? Market will come back here and you become liquidity. Yes, you become liquidity because you are buying at a very, very high zone. People that will now wait, the smart money traders will wait and buy money and buy at a very good zone, the lowest zone possible, and then you become liquidity. And you see, immediately it sweeps liquidity, taps into the right zone. Fiam, it goes. So I hope this clearly makes it easy. But I'm going to show you an example on the chart here. Now, if you look at this is GJ. The market has been moving up nicely, moving up, giving us break of structure here. And like I explained, once there's a break of structure, there's pullback. It will not move well. It will not move well because, come on, why am I counter trend trading? All right, it will not move well, but it will give us a pullback. Anytime liquidity is swept, pullback happens. Anytime liquidity is swept, pullback happens. So once you get to know that everything in the market is liquidity, now your eyes are shining. You are more open to the idea that if this happens, this is what will happen. You now understand what's going on in the market. All right. Now look at it was doing an uptrend, and what happens here? You can clearly see a change of character here. Major this thing has been broken. Major structure has been broken, and you can clearly see our change of character. I taught you that in the last class. Now our change of character happened, and not just change of character, break of another structure happened. You should be getting ready to sell. So now market comes back here. What are people doing? They're like, the market has come back, let us start selling. Instead of waiting for the extreme zone for the sell, they are selling here. Look at what happens. They sell. They'll be thinking that it will come to the nearest low to continue the low. What happened? Markets came, sold up to this point, turned back, chopped their SL. They have become liquidity. Why? Because they are selling at probably the 50% of the last move, or they're selling at where they are seeing a gap. Okay? So what happened to them? What happened to them? Okay, somebody will say, there's other block here. Somebody will say, there's other block here. Waiting happen, I'm entering. Now they enter, they are waiting to take the next low. For where the thing turns back on them and comes to the extreme zone for the beginning of the move and then sells. This is a typical example of a demonstration of internal liquidity being created, grabbed, and moved to continue down. All right. So yeah, this is a beautiful structure. I'm actually waiting to see more moves. Today is Monday, so it's very, very slow. But this is an example of what I mean. All right. What did I see? Downward liquidity. This is a downtrend kind of liquidity because you can see the market is going down every time it gets here. It's going down, creating kind of like a down. So it did this, then came back, and moved opposite. So that is all you need to know. When you see the market moving opposite after it has grabbed a higher low or lower low and it moves, or higher high or lower low and it moves, you know that that is transactional liquidity or external liquidity that has been grabbed. Okay, despite the fact that you can find money here, trend line liquidity. Now this is downtrend inside, trend line liquidity on the inside of a main structure. Once you see this, just wait for it to come and sweep it before you enter the trade. All right. I've given you people insights on how to be smart about trading. All right. I hope you've learned something today. All right. If you have any questions, put it in the comment section. I would be willing to help you guys understand this thing. Let's kill this market. This year is almost coming to an end. Love you guys. See you and God bless.